All right, today I have another golden algo nugget for you, number 6. And I want to talk to you about the market maker models. And I'm going to make a part 1 and a part 2. So there are two different type of signatures you can look for in the charts. So why am I doing all these daily nugget stuff? Well, I have been an entrepreneur for 20 years now, and I'm celebrating that on April 1st. So in 2005, I started to become an entrepreneur. And that's why I'm giving this stuff away. And I also want to invite you to come inside of my community in Discord, where I share my weekly outlooks, my daily outlooks, my own trade setups. And you can join a bunch of gangsters that really love to trade ICT concepts and are also working on themselves, on their personal development, on their mindset. There are some badasses inside of that. And I really love the people that are really want to become true sovereign traders and become independent traders. So if you're looking for that, then this is the right community for you. It's not for the signal seeking people. It's for the people that really want to become a better trader. So let's dive into the chart, shall we? Well, market maker models. First of all, a market maker model actually is nothing, well, let's not say nothing but if you start to look at them like this, it becomes a bit easier a lot of the times. A market maker model is just a form of a retracement leg. So we have a down move here and it starts retracing up again. Or it makes a up move first and makes a down move then. And what you see is that the move down and the move up comes back at the same point. But how can you know when something is a market maker model? Well, personally, I like to look for specific signatures, and I like to do measurements of the manipulation leg. So what is the manipulation leg? The manipulation leg means the final move before price started shifting. So the lowest low is right here. And this was the final leg lower, the final run, before it started to break structure above that high again and then started pushing up. So what you want to do is do a standard deviation measurement on this manipulation leg. So that means from the low to the high. And if I put on my standard deviations, you will find this specific signature. And what I like to look for, and now comes the algorithmic nugget, is that if you draw out the zone between 1 and 1.5 standard deviation, like that, and there's the 1.5, but it doesn't matter right now, but you will see that at 1 standard deviation, well, it's not hit to the tick, but at 1 standard deviation, if you would draw it out on a Wix, it probably will, or like a different chart. But Wix, it will hit it. So Wix also count, bodies also count, and then you see it actually lines up between 1 and 1.5. But you'll start to notice that around 1 and 1.5 standard deviation, an AMD pattern starts to develop. And what do I mean by that? Well, the AMD is the accumulation and then the manipulation below the zone, and then the expansion move up distribution. So accumulation, manipulation, distribution leg. So AMD always looks like this. Well, what do we see right now? Right here. Can I extend this? No, I cannot. All right, let's extend it like that. We have an accumulation phase, a manipulation phase, and then the final fast, it's always a fast distribution leg up. So right here, AMD in itself, a fractal AMD. And everybody here thinks, oh, we broke the lows, market structure shift again for lower. But once you start measuring the standard deviations and you start to notice that this happens around the 1 and 1.5, you need to be cautious that this could be a manipulation, and that's how you know. So I think this is a great thing to look for in the charts. Measure the manipulation legs, and you can do it anywhere. It doesn't even matter. Just measure some sort of manipulation and look at how the chart responds inside of that level and if it forms an AMD in itself. Because if you then see a market structure shift inside of this is a super high probability trade. First of all, back up to here. So this is a mini market maker buy model, fractal. But you will see it will end up at the drawn liquidity being that. So we had an initial consolidation, then a move lower, and then like this was small. Not small, slow. A lot of the times you get a slow move down and a fast move up. But this had to do with the fact that this was a bearish market. So we had a slow move up because in the end it was the buy side. Oh my God, the buy side of a sell model. But that's not, look at that. What I'm looking at now. But that's what explains why this was a slow move up. So initial consolidation, first accumulation phase, second accumulation phase, smart money reversal play, first redistribution leg, AMD here at 1.5 standard deviation. Super nice if you ask me. And let's measure the consolidation. Oh yeah, 2 standard deviation. Yeah, so it's beautiful measurement. But just remember this little algorithmic nugget. And in part 2, I will share another one about market maker models and what you can find inside of them. All right, thank you for watching. Bye-bye.